Good morning, students. Welcome to this BOS for Success session of Paper 8 Indirect Tax Laws. I am your mentor for today's session. I am CA Shafali Jain. I am a faculty at Board of Studies. Since this session is very near to your exams, your forthcoming examination on November 2023, so we will be focusing on the exam related preparation, statutory updates, then what is the pattern of the question paper, and what is the position of law on the basis of which you have to answer the questions in the examination, what are the relevant publications, so that you do not miss any of the relevant publications or any of the relevant notification circulars which is applicable for exams. All of them, latest notifications and circulars are compiled in statutory update. We'll be going through statutory update also today. And then what are the points which you need to keep in mind, or what are the things which you need to keep in mind while preparing for the exam, day before examination, revising for the paper. All these things we'll try to cover in this session today. Depends on the time which we have and whatever. But first of all, we'll start with the statutory update for November 2023, because we have been receiving a lot of requests from the students to cover the latest updates and latest amendments for the examination, so that this is the right time to brush up the latest amendments which are applicable, because earlier concepts you must have gone through by now, and the amendments we need to focus more because they are very important from the examination point of view. These are the latest updates which you should be aware as a student, as a taxation student. So first of all, we'll start with the statutory updates. The first first amendment is actually a clarification which is given by way of a circular. Now, what does it say is the deduction on account of no claim bonus allowed by insurance company from the insurance premium payable by the insured. Now, whether this is a consideration for any service provided by the insured to the insurance company. First of all, let us understand what is a no claim bonus. Whenever we take an insurance policy, and a person who is getting insured, he takes an insurance from an insurance company, then the company offers him a scheme that in case he doesn't lodge any insurance claim during a particular year, then in the next year, he will be given a bonus. And that bonus is called no claim bonus. Now, what this bonus means, in next year's premium, the insurance premium amount, there will be a deduction of a specified amount in case the person does not file any insurance claim during the previous year. So suppose in 23-24 a person does not file any insurance claim. Reason could be that he doesn't need it, or the amount was very small and he feels that he doesn't need to lodge an insurance claim for that particular amount. Then in the next year, whatever premium is due for that particular policy, the amount will be reduced by a specified amount, and that will be the no claim bonus. So it is a deduction which is allowed from the premium amount by the insurance company. Now, a doubt arose that whether this no claim bonus which a insurance company is allowing is actually, it is a consideration which the company is paying to the insured person for providing services to the insurance company. So see, who is providing here? What was the doubt? Doubt was that the insured person is providing a service to the insurance company in the form of agreeing to obligation to refrain from lodging an insurance claim during the previous year. So that means there was a doubt that whether we can say that the insured person has agreed that he will not file any insurance claim during the previous year, and in consideration for that he will get the no claim bonus. So the answer is no, because whenever an insured person, he takes an insurance policy, whenever the insured person takes an insurance policy, so the intention is not to get this no claim bonus. Whenever we take an insurance policy, we do not wish that we'll get this no claim bonus. The first primary intention or the purpose of taking a policy is to get yourself indemnified against a loss, against an exigency. So if it's a life insurance policy, then in case of loss of life, you want to get the amount. If it's a health insurance, then if you have if in case you get admitted to the hospital, you want to get the expenses reimbursed. So this is the intention of taking an insurance policy. The intention is not to get the no claim bonus. So we cannot say that the insured person has actually agreed at any point of time during the previous year that he will not lodge an insurance claim and then he should receive a no claim bonus. This is actually, if he does not file any insurance claim, he'll get the no claim bonus as a benefit. But this is not the intention of entering into this insurance contract. So the answer is that this is not a consideration. The no claim bonus is not a consideration for any service provided by insured to insurance company. Insured person is not providing any service to the insurance company, and therefore this is not a supply. In case there is no consideration, then we cannot call that particular transaction to be a supply, because in supply, consideration is required. Then in course of furtherance of business, that particular supply should be there. So when consideration itself is absent, so we cannot say that this is a supply. This is what the circular has clarified in this case. Now, second doubt which may arise in anybody's mind is that, okay, this is not a supply. No claim bonus is not a supply by insured. But when this no claim bonus is provided as a deduction by the insurance company to the insured, then while computing the value of supply of the insurance services, whether this should be allowed as a deduction or not. Now that we have to see. Let us see whether it is allowed as a deduction. So it's a kind of a discount which the insurance company is offering to the insured. That suppose your premium was 10,000 rupees for a particular year, and because you have not filed any claim during the previous year, so this 10,000 insurance premium will now reduce to 9,000, and 1,000 will be your no claim bonus. So with this 1,000 rupees, whether we should allow it as a deduction while computing the value of supply or not, now this is the question. So for this, what we should do is we should go to section 15, which helps us in determining the value of supply. Now section 15 has subsection 3 clause A, which says that a discount is allowed as a deduction from the value of supply in case two conditions are fulfilled. First condition is discount is given before or at the time of supply. And second is discount is duly recorded in the invoice. Now we have to apply both these tests to our no claim bonus, and we have to see whether this no claim bonus qualifies these two tests to get the deduction of the amount or not. First is discount is given before or at the time of supply. So discount is given at the time of supply when you are paying the insurance premium amount. At that time, discount is given. That no claim bonus is there. So first test is passed. Second test is discount duly recorded in the invoice. Now this discount or this no claim bonus is there in the insurance document. When we are entering into the insurance policy, at that time in the document itself, it is duly disclosed, it is duly recorded that in case you do not claim any this insurance claim, you do not file any insurance claim in a particular year, you will be getting this no claim bonus. So this is duly recorded in the insurance document, plus in the invoice which will be raised for the insurance premium amount in a particular year. In the invoice also it will be duly recorded. So that means it is recorded in the invoice, it is given at the time of supply. So it passed both the test of being eligible as a deduction from the value of supply under section 15(3)(a), and as a result, the no claim bonus is permissible as a deduction from the value of supply. So no claim bonus is not a consideration for any service provided by insured to insurance. No, it is actually deductible from the value of supply of the insurance services which insurance company is providing to the insured. So only service which is being provided in this whole setup is by the insurance company to the insured. And what is the service that is being provided? That is the insurance services. No claim bonus, that is a deduction which is provided that is a discount which is provided by the insurance company to insured, and therefore it will be allowed as a deduction as per section 15 subsection 3 clause A. Hope that is clear to you. Now next is the dispensation from payment of GST under RCM extended to courts and tribunals. Now, if you go through the reverse charge notification, you must be aware that the central government and state government has certain, there are two, you can say, entries which provide reverse charge provisions or which apply reverse charge provisions to the central government and state government. For example, the services provided by a central government and state government to a business entity. They are taxable, and they are taxable under reverse charge mechanism. That means on those services, the tax is payable by the business entity or the recipient. Central government and state government is not required to pay tax. Similarly, we have another entry, that service, the renting of immovable property service provided by the central and state government to a registered person, to a person registered under GST law. In that case also, the tax is payable by the recipient. So in both these cases, reverse charge provisions apply, and central government and state government have been dispensed with the liability to pay tax or to deposit tax with the government. Who is going to deposit tax with the government? It is the recipient. So this dispensation of payment from GST, this notification says that for particular purpose of this notification only, remember that is, it's important to note that it is only for the purpose of this notification that these provisions which are applicable on central and state government, they will apply to Parliament as well as state legislatures. And now the amendment which has taken place is that these provisions will apply to courts and tribunals also. So this is what the notification says, that the central government and state government does not have to pay tax in case of these two entries. The notification has made these provisions specifically applicable to Parliament, to state legislatures. This was earlier also there. The amendment which has taken place out because of which the courts and tribunals also are eligible for this dispensation from payment of tax. Now, what does it mean? That means in case we have any renting of immovable property services or any services provided by these courts and tribunals to a business entity, in those cases, recipient is liable to pay tax. Suppose the courts have rented out any chambers in the courts to lawyers or to any of the persons, to any of the business entities they have allowed. So in that case, the reverse charge provisions will apply. So courts and tribunals have been equated with the central government and state government, but only for this particular purpose of notification of RCM. So it's not for exemption or for any other purpose, only for reverse charge mechanism notification, that is 13/2017. For that particular notification, the central government and state government, whatever provisions are applicable to them, they will also be applicable to courts and tribunals. Okay. Now next is the renting of residential dwelling to a registered proprietorship. Renting the residential dwelling in his personal capacity for use as his own residence, then in that case that will be exempt from GST. Now what does it actually mean? Let us understand this. So renting of residential service. Okay. Now this particular service, earlier renting of residential dwelling for use as residence was exempt from tax in all the cases. Okay. Now there is a amendment to this notification. Now what is the actual amendment is, there are two categories. First is, now we have to see first of all that this is a general point which was earlier there also, that in case this renting of immovable residential dwelling is for a commercial use, if it is being used for commercial purposes, then in that case that is taxable. That is, exemption was earlier also it was not there, now also it's not there. So if you are renting your residential dwelling, your residential unit for commercial purposes, even though it's a residential unit, it is being used for some commercial purpose, some shop is there or some showroom is going to be opened there, then that will be liable to GST. But in case it is used for residence only, then earlier it was a blanket exemption was available, that if a residential dwelling is used for residence, then it was exempt from GST. Now, earlier there was a change in the notification which said that if it is used by a registered person, if this residential dwelling for use as residence is given to a registered person, so it will be taxable. And if it is given to an unregistered person, it will be exempt. Then again, for November 23 examination, another amendment has come in this particular notification, and that is, this holds true here now also for commercial use also it's taxable. This is also true. Regarding this registered person to whom this residential dwelling is being given for use as residence, now here some change has been there. Now let us see what is this change. If this registered person is a proprietor of a proprietorship concern, So the person who has taken the property on rent or the residential dwelling on rent for use as residence, he is a proprietor of a proprietorship concern. He has taken the property on or the residential dwelling on rent for his own purpose or on his own account. That means he is the one who is taking it on rent, not a proprietorship concern. He is renting it, he is taking it on rent in his personal capacity and for his own use. So this proprietorship concern is not going to use this particular property or particular residential unit. Then if these conditions are satisfied, it has been made exempt, because that was not the intention of law to make these persons taxable. But with the wordings that was changed earlier, what was happening, the persons who are taking it for their own personal consumption or any sole proprietor, if he is taking it for his own personal consumption, any residential dwelling, that was also being made taxable. But that was not the intention. So this has been specifically exempted. This notification has been exempted. And now if a sole proprietor is taking on rent any residential unit on his own account in his personal capacity for his personal use, then in that case, it will also be exempt. So what will be taxable now is if we are renting a residential dwelling to a registered person, and this registered person is not a proprietor of a proprietorship concern who is satisfying these conditions which we have mentioned. If any other person is there, he is registered and he is taking residential dwelling for residential use, then for example, now what can be that purposes? For example, a partnership firm is there for their partner, for the residence of their partners, or a company is there for the residence of its employees that is taking a residential unit for use. It is being used as a residence of its employees only, but in that case it will be taxable. So for commercial use, it will not be exempt. Then if others are using, other than sole proprietor, if somebody is using, it will not be taxable. So what will be, it will not be exempt. So what will be exempt is if it is used by an unregistered person. So if residential dwelling has been rented to an unregistered person, you do not have to see anything else. It is exempt. And if it's a registered person, then it should be a sole proprietor using it in his own account and for his own purpose. In his personal capacity, he should take it on rent. Then he will be exempt. So in case you have any queries in between, you can ask through our portal. Now next is the exemption, which is withdrawn. These are the amendments which are there in the exemption from GST chapter. Service by way of access to a road or a bridge on payment of annuity has been exempt. So this exemption has been withdrawn. Now next is the authority or board or a body set up by a central or state government, including NTA. What is NTA? NTA is National Testing Agency, which conducts various entrance examination, including the JEE exam. So this any authority, any body which is set up by the central or state government, and the purpose of that particular body is to conduct the entrance examination, for which are required. Those entrance examinations are required for admission to an educational institution. So what has happened? We know that educational institutions are exempt from GST. That exemption in a limited manner, that if any body or any authority which is conducted for conducting any entrance examination, if that body is there and it is only constituted for the purpose of conducting that entrance examination, then that particular service provided by that authority or body or board is exempt from GST. So any authority, body or board set up by the central government or state government, which is established for the conduct of entrance examination for admission to the educational institution, then this authority or this body or this board, for the limited purpose of conduct of the entrance examination, will be considered as an educational institution. Okay. So educational institution for the limited purpose of providing services by way of conduct of entrance examination for admission to educational institution. So it will be treated as an educational institution, but for this limited purpose only, for the purpose of conducting this entrance examination. So they will be getting the exemption from GST for this particular purpose. If they are conducting the entrance exam, then that will be exempt from GST. Next clarification is that the accommodation services provided by the various Air Force, Navy, Army, Parliamentary Mess, or the police force mess. So whatever, all these mess, they provide accommodation services to their personals. Their personals, they don't, they reside in their quarters or the residence provided by these authorities only. So these accommodation services, the question arose that whether these services are exempt from GST or not. So we know that any service provided by central government, state government, union territory or local authority provided to person other than business entity, that is exempt from GST under entry 6, that we all know. So the question was whether they will be included in this entry or not. So if these services will be exempt from GST or they will be considered to be included in entry 6, provided the service is provided by them to any personal which is working in their mess or any other business entity, which any person other than business entity. So that will be exempt from GST. The next amendment is in place of supply chapter, and this is a clarification actually. But before I apprise you of this clarification, I want to tell you that this particular clarification is only applicable for November 2023 examination students. So if any student who are going to appear for May 24 examination, the position of law has changed for May 24 examination. The proviso on which this clarification has been issued, which we are going to discuss just now, this proviso has been omitted, and that is applicable for May 24 examination. So for May 24 also, briefly I will tell at the end that what is the position. But before that, remember that this is not the provision which is applicable for May 24 examination. So for November 23, only this clarification is applicable, because this provision is no longer relevant after November 23 examination. It is not applicable for May 24. So what does it say is this provision, this clarification? It provides that, first of all, it is based on the proviso to section 12.8. What does it provide? Proviso to section 12.8 provides that in case of the transportation of goods service, that means goods are being transported. They could be transported by mail also, courier also, or by any other mode of transport, vessels, or by air, by road transport. So goods are being transported from one place to another. Recipient and supplier are located in India. Then what will be the place of supply? We are first talking about section 12 subsection 8. So what is the place of supply as per section 12 subsection 8? That will be the location of registered person or recipient. So the person who is receiving these services, his location will be the place of supply. Now, what does this proviso to section 12.8 provides? Proviso to section 12.8 says that in case the destination of the goods is outside India, so the goods are being transported outside India. So there could be a case where the recipient, suppose recipient is Mr. X. Now he has got a contract from Mr. George for supply of goods. Now Mr. X came to Mr. Y and he asked him to supply him some goods, but instead of sending the goods to Mr. X, he might ask them to directly supply it to Mr. George, that is the destination outside India. So this could be a case that recipient and supplier both are located in India, but the destination of the goods is outside India. So as per proviso to section 12.8, which was in existence earlier and which is relevant for November 23 examination because it was in existence till 30th April 2023, the cutoff date for November 23 examination. So as per proviso, the place of supply was the destination of goods. So destination of goods was the place of supply. That means the place of supply will be outside India in such a case. Now, since place of supply is outside India, the definition of the interstate, now we have to determine whether this transaction is an interstate supply or intrastate supply. So irrespective of the location of service provider or service recipient, whether they are located in same state or not, this place of supply, since it is outside India, it becomes an interstate transaction, because as per section 7 subsection 5, where the place of supply is outside India, then the transaction is an interstate transaction. Now since it is an interstate transaction, IGST will be leviable on such transaction. So IGST is payable. Now the question or a doubt which arose in this case is that whether Mr. X or the service recipient, can it take the ITC of this particular IGST which it is paying for transport of goods outside India. Why this doubt arose? Because the place of supply is outside India. So there arose a doubt that whether the whether the ITC on this particular transaction or the ITC of the IGST, which is payable on this particular transaction, can it be taken by the recipient or not? So what was the consideration in this case is that section 16 provides the conditions for which one needs to comply with for taking the ITC. Those conditions are complied here, that the person is in possession of the goods, return has been filed, all these conditions, if they are fulfilled here, plus section 17(5), which blocks certain credit or credit in certain situations. None of the situations bar credit in such cases where the place of supply is outside India. So the circular clarified that in this case, the ITC will be available of the IGST payable by Mr. X of the goods of which, in respect of the services for which the place of supply is outside India. So in this case, the ITC will be available. Now, this problem will not arise henceforth or after now this problem will not arise because this proviso to section 12 subsection 8 has been omitted. But please remember that whatever we have discussed till now is applicable for November 23 examinations. So I request November 23 students not to get confused. Whatever is position of law applicable for you is only that proviso to section 12(8) provides that in case of the goods transported outside India, the place of supply is outside India, Therefore, it is an interstate supply. IGST will be payable on the same, and therefore, the ITC of the same will be allowed because it is not specifically blocked under section 17 and all the conditions of section 16 have to be complied with. In that case, the ITC will be available. Now, we come to the position which is applicable for May 24 students. For May 24, this proviso does not exist. Now, when this proviso does not exist, so this problem of taking ITC on a transaction where place of supply is outside India also does not arise. Why? Because in the absence of proviso to section 12(8), the place of supply now will be the location of the registered person only. That is the location of the recipient. So in that case, the place of supply does not go outside India. And as a result, the ITC can be taken by the recipient. But this is only for May 24 students. For November 23 students, this clarification is applicable and ITC can be taken by the recipient. Okay. Next is Rule 37. Now, what is Rule 37? It has been amended. What does this rule provides? Rule 37 says that the supplier, whenever he supplies any goods to the recipient, then the recipient has to pay the value plus tax to the supplier. Now, this is the duty of the recipient. Recipient immediately takes credit of whatever tax he pays to the supplier. That is, we all know. But he has to pay the value of the goods as well as tax to the supplier in order to ensure that the supplier gets the tax amount well in time, or not well in time, at least he gets the tax amount within a reasonable time, so that he also must have discharged his liability to deposit tax with the government. So he also should get the tax from the recipient. In order to ensure this provision was there, which said that within 180 days of the invoice, of the issuance of invoice, the recipient should pay to the supplier the value of supply of goods plus the tax amount. Both these things the recipient has to pay to the supplier. Now, in case he does not pay this amount within 180 days, the value as well as the tax, because he has already taken ITC, he must have taken ITC at the time in the month in which he has received the goods or he has received the service. So in that particular month, he has taken credit. After 180 days or after 6 months time, we got to know that he has not paid the value and tax to the supplier. So what he was bound to do at that time, he is actually bound. He has to reverse the amount of tax or ITC which he has taken, or he has to pay the amount of ITC which he has earlier taken. Now, with the drafting of Rule 37, there arose a doubt that in case there is a part payment by the recipient to the supplier. Now, this is an example which we have taken here. Suppose the value of supply was 100 rupees and tax paid on it was 5 rupees. So this was what supplier has supplied to recipient, and within 6 months or within 180 days, not 6 months, exactly 180 days is the time limit. So within 180 days, the recipient has paid only 60 rupees of the value and proportionate tax, that is 3 rupees tax. So this is what recipient has actually paid to the supplier. So now, will the recipient, or is the recipient liable to reverse the entire 5 rupees, or he has to reverse only the left out amount? That means the 2 rupees, because 3 rupees 3 he has already paid to the supplier, so he can very well avail credit to that extent. And rest 2 rupees which he has not yet paid to the supplier, should he reverse only that amount? So if we see logically, I think most of you must have been doing in the exam also this way only. But the way the rule was drafted, this was not very clear, that, and some people misunderstood it this way, that we have to reverse the entire amount. It was perceived by the department also this way, that we have to reverse the entire amount. Even if we fail to pay this 40 rupees out of the total consideration, we have to reverse the entire credit which was taken, that is credit of rupees 5. But that is not the correct situation. So therefore Rule 37 was amended, and the language of Rule 37 has been appropriately redrafted to the effect that now the recipient has to reverse only the proportionate ITC, which is proportionate ITC. That means ITC proportionate to the value which is not yet paid. So value which is not yet paid is 40 rupees, and on that the ITC which is to be reversed or which is to be paid is rupees 2. Plus he has to pay the interest on that particular amount. So this is the amendment. Now this is the second Rule 37A. This is another amendment in ITC chapter, which says that earlier section, the earlier Rule 37 which we were discussing, there recipient had a liability to pay the value as well as tax to the supplier. So that supplier would have deposited it with the government, but he should also get his due amount. So recipient's liability to pay it to the supplier, the tax as well as value, was casted upon him. Here Rule 37A says that the supplier, now recipient takes tax only when supplier has furnished his GSTR 1, and that amount is duly reflected in GSTR 2B of the recipient. This we all know from section 16 plus Rule 36. So these two conditions need to be fulfilled. Now suppose these two conditions were fulfilled, that means the details of the invoice furnished in GSTR 1 or invoice furnishing facility, they are appearing, and the supplier has done that part. That means supplier has furnished GSTR 1 or invoice furnishing facility, he has shown the invoice. And on the basis of that, the recipient has taken the ITC, because these are the two conditions which need to be fulfilled. This GSTR 1 should be filed by the supplier and it should be reflected in GSTR 2B. Since he has filed GSTR 1, it was being reflected in GSTR 2B, and accordingly the recipient availed the credit in GSTR 3B. That was also fine. But after that, till 30th September of the following financial year, that means if we are talking about financial year 22-23, then till 30th September 2023, the supplier did not file the corresponding GSTR 3B. Now this is a liability on part of the supplier. Earlier we talked about the recipient, that the recipient has to pay value plus tax. Now here we are saying that supplier also, if he has filed his GSTR 1, he has shown the invoice in GSTR 1, then corresponding tax has to be paid by filing GSTR 3B. But in this case, the supplier has not filed the corresponding GSTR 3B, which was corresponding to this particular invoice on which the recipient has taken the credit, till 30th September following the end of the relevant financial year. So if he has not filed his GSTR 3B till 30th September of next financial year, then up to 30th November of that particular financial year, he has to reverse the ITC. So whatever ITC has been taken by the recipient, in that case also he has to reverse that ITC, because his supplier has not furnished GSTR 3B. The tax has actually not been given to the government. So maybe recipient has given within 6 months, recipient must have paid the value and tax as per Rule 37. But as per Rule 37A, when we see this GSTR 3B by the supplier has not been filed. So all the conditions have to be collectively fulfilled. And if the supplier does not file his GSTR 3B, then up to 30th September of next financial year, then up to 30th November of the next financial year, recipient is liable to reverse the credit which he has earlier taken. Now suppose the recipient does not reverse this credit up to 30th November. Then what is there? then in that case, he has to pay that amount, the amount of tax, along with interest. Then in case interest liability will arise. And subsequently, when the supplier pays the amount or he files his GSTR 3B, he pays the tax amount on that particular invoice, which the recipient has reversed earlier. So in that case, the recipient can re-avail the credit. So whenever he furnishes GSTR 3B, then the credit can again be availed by the recipient. But till that time, he has to reverse it. And if he does not reverse it till 30th November of the next financial year, he has to pay it along with interest. When the supplier files his GSTR 3B, pays the tax, then the recipient can again avail the ITC. Okay. Next is the amendment and registration chapter. Prasad is saying, please repeat Rule 37 amendment again. Okay, Prasad, after this amendment, this registration amendment, I will once again explain Rule 37. So, option made available to TDS TCS registrant to apply for cancellation of registration. Rule 12 sub Rule 3 has been amended. Now, earlier what was the position is that only upon that, you know that TDS TCS registrant, when they have to take registration, they have to take a separate registration. If they have if TCS, that means if an electronic commerce operator is liable to collect TCS or tax at source, then he is required to take a separate registration as TCS collector. Or if a government agency, government, central government, state government, if they are receiving any services and the value is more than 2,50,000, all those conditions of Section 51 are complied with and they are bound to deduct TDS, then they have to take registration as TDS deductor. Now, this registration once taken, there was no option with the TDS TCS registrant to withdraw that registration. Once they have taken that registration, the only option where this registration could be cancelled or could be withdrawn was if after an inquiry under any of the proceedings of the GST law, the proper officer was satisfied that yes, this person is no longer liable to deduct tax, or this electronic commerce operator is no longer liable to collect TCS, then in that case, that registration could have been cancelled. But those registrants themselves could not apply for cancellation of the registration. Now, this provision has now been enabled in Rule 12, sub Rule 3, which provides that on a written request by TDS TCS registrant, the cancellation, registration of these registrants can be cancelled, but only condition is that the proper officer should be satisfied that yes, they are no longer liable to deduct tax, or they are no longer liable to collect tax under Section 51, 52 respectively. So this can be there when it can be possible. Now, what is the case where this can be possible? Where the electronic commerce operator has closed his operations, so he is no longer liable to collect tax, or he has started the services being provided on his platform are such where TCS is not required to be collected no more. That means he has started providing some other services where he has to pay tax on his own account. That means 9(5) services, the notified services. Similarly, in case of TDS registrant, he is no longer required to deduct TDS. So then also his registration can be cancelled. He can make a written request and he can get the credit. He can get his registration cancelled. Now, Prasad is saying that Rule 37 has to be repeated again. Just a minute. So, Prasad, you are asking that re-availing of credit for interest also. I didn't get your point. You are talking about Rule 37 or Rule 38, Rule 37A. Please clarify. But till that time, let us go through Rule 37 quickly once again. So, when supplier provides any goods to or makes any supply to recipient, then recipient is liable to make the payment of the value of such supply plus the amount of tax to the supplier within 180 days of the issuance of invoice. Now, in case he does not make payment within 180 days, full payment. That means neither the value nor tax he has paid within 180 days to the supplier, then entire ITC which he has taken at the time of availing the service or receiving the goods, that has to be reversed by the recipient. In case he makes a part payment, so this is the amendment which is there in Rule 37, that in case he makes a part payment, then he has to reverse the ITC also partly. That means he has to reverse the ITC only to the extent the value has not been paid. Whatever value he has paid to the supplier, to that extent he can avail the credit, and that is lawfully he can do. That is not a problem. This is the amendment which is there in Rule 37. Renting of residential dwelling under RCM and exemption service. This I will be taking during later part of the day. First of all, let me complete the other amendments. Okay, now the amendment in particulars of tax invoice. Now, Rule 46 also has been amended. There has been amendment in Rule 46 to the extent that where the invoice is issued to an unregistered person. Now, where the invoice is issued to a registered person, where the invoice is issued to a registered person, then the name, address and GSTIN or UIN of the recipient is required. Now, in case it is an unregistered person, obviously he will not have a GSTIN number or UIN number. So then what are the particulars which have to be mentioned? So earlier what was there is, or it is still there, but the amendment is only this portion. So Rule 46 said that the name, address and the address of delivery, the recipient's address, his name, which is there in case of registered as well as unregistered person, the address of the recipient is to be mentioned on the invoice. But the address of delivery, that means where the goods have to be actually delivered or the services, the supplies have to be actually made, that address has to be given along with the name of the state and its PIN code. That was required. So in case the value was more than 50,000 or 50,000, and it was mandatorily given, these details have to be mandatorily be given. If value is less than 50,000, that means more than 50 or more than 50 mandatory, up to 50, not up to 50, less than 50 we can say. So if it is less than 50, value of taxable supply is less than 50,000, then at the request of the recipient we need to mention these details. So in case of the, however, in case of the services supplied through ECO or the services supplied by an OIDAR service, then in that case, we need to mandatorily mention the name, address of the recipient along with the name of the state and PIN code. So this is a procedural requirement which has been there or which has been amended. These details have to be mentioned in the services provided by ECO. Services provided by ECO, that means where ECO is liable to pay tax, or with services which are supplied through ECO, or where the service provider is an OIDR. Then in this case, these details are mandatory. Rule 46A has been amended, which provides for the furnishing of invoice cum bill of supply. Now, invoice cum bill of supply is there where a supplier supplies both exempt as well as taxable services, then or goods. Then in that case, he is required and he is supplying these goods to an unregistered person, and he can do with an invoice cum bill of supply. He need not issue separate documents to the persons. In case of the unregistered person, he can issue an invoice cum bill of supply. Now, this Rule 46C, it has words notwithstanding anything contained in Rule 46, 49 and Rule 54. Now, with these words being there, it was being perceived as if the invoice cum bill of supply may not have all the contents. We know that there are prescribed contents for a tax invoice, Rule 49, bill of supply, Rule 54, the issuance of invoice in special cases. So whatever requirements are there for a particular invoice or bill of supply as per Rule 46, 49 or 54, the contents which need to be there as per these rules, how it was interpreted, how these words were earlier interpreted, that since it has been mentioned notwithstanding these three rules, so there is no requirement of having those particulars also in this invoice cum bill of supply. But that was not the intention of law. So it was only a convenience which was provided to the to the suppliers, that you can issue one document here, a simple document, but the particulars of invoice or bill of supply need to be there in that document. So that is why a proviso has now been inserted to Rule 46A, which says that the said single invoice cum bill of supply has to contain the particulars as specified under Rule 46, 49 or 54 as the case may be, whichever is the case applicable. Those particulars have to be mentioned. So these 46 and 40, when we say that it is notwithstanding these three rules, this non-obstante clause does not mean that these particulars should not be there. The proviso clarifies that yes, these particulars should be there. Now, e-invoices, the exemption from generation of e-invoices, we know that when a particular supplier, it crosses a specified turnover, which is 10 crores for November 2023 examinations. So it crosses that particular turnover, it has to issue the e-invoices mandatorily. However, some suppliers are exempted from this requirement of issuing the e-invoices. Now, these are SEZ units, insurance companies, banking companies, then the GTA and passenger transportation services, the government department or local authorities. So these entities were exempt from the requirement of e-invoicing, even if their turnover crosses the specified threshold limit. But there was a doubt that whether if these entities, they are providing two types of services. So whether this e-invoicing exemption will apply to for example, it's an insurance company. So insurance company is providing insurance services also and some ancillary services also. So whether this exemption will be only for insurance services, which is the true nature of that particular entity, or any ancillary service, any other kind of service which this particular entity is providing. So clarification is that the exemption from generation of e-invoices available for the entity is available as a whole and not restricted by the nature of supply being made by the said entity. So whatever services this entity is providing, whatever supplies this entity is making, to all those supplies, this exemption from e-invoices will apply. Okay. For example, banking company, it is providing banking services as well as it is supplying goods, including bullion. So exemption from e-invoices will be for all these services. That means for banking services also, e-invoices is not required to be issued, as well as for goods, including bullion. If it is supplying goods, bullion and silver or other precious metals it is providing, then it is also exempt from e-invoicing in that case also. Then comes the e-way bill generation. Exemption from e-way bill generation was available to transportation of jewelry, goldsmith and silversmith wares, and other similar articles if are being transported. Then there was no requirement of generating e-way bill. The reason was obviously security, because these are high value items, and if they are being transported from one place to another and we are generating a document which is available to public at large, or any person can intercept and check your e-way bill. So when you're generating that document, e-way bill document, it was exempt. These particular items were exempt from the e-way bill requirement because of these reasons. But the amendment has been made in this particular rule, that is Rule 138 sub Rule 14, which specifies the goods where the e-way bill is not required to be issued. So we told that we already discussed that this jewelry, silverware, goldware, they are not, e-way bill is not required for their transportation. But the exception here, which has been included now, is the imitation jewelry. So if it is an imitation jewelry, obviously it will not be a very high value item. And that is why we need to generate e-way bill for transportation of the imitation jewelry. Then if we are transporting an imitation jewelry, then which is not a high value item. So for this purpose, the e-way bill needs to be generated. Now this amendment, you can yourself go through. It's not very important kind of amendment. This is also a late fee which is applicable on the annual return. Now, late fee on annual return has been rationalized. These are only the limits which have been provided to you. I think you can go through it. This is given in your study material as well as in the this statutory update. You can go through it. Now we come to the next amendment, that is new rule 88C has been introduced. Now this is important, that in case there is a difference in the tax payable as per GSTR 1 and as per GSTR 3B, then what is going to happen? So in case there is a difference between GSTR1, the tax which is we have reported in GSTR1, or the outward supplies, tax payable as per the outward supplies in GSTR1 and in GSTR3B, by a specified percentage and a specified amount, prescribed amount, then what is going to be the repercussion? So first of all, we have to see whether there is a difference in GSTR1, tax payable as per GSTR1, and tax payable as per GSTR3B. In GSTR1, we report only the outward supplies. In GSTR3B, we compute the net tax payable by taking into account the inward supplies also. So, but whatever is the output tax which is being payable, not the net tax payable, the output tax payable. As per GSTR1 and as per GSTR3B, there should not be any difference in the two, or it should not be at least lower than the GSTR1 amount. So if it is there, if it is so, then what is going to be the repercussion? Then in that case, the department is going to send a intimation to the supplier on the common portal. So if department notices that yes, the GSTR1 amount is higher for a particular supplier, and the amount of tax which is there in his GSTR3B, it is less, and this difference should also be a specified difference. There should be a reasonably high difference which will be specified through a notification separately. It is not yet notified that what should be that percentage and that amount. But if it is the difference is of a particular amount and a particular percentage, then the department will send an intimation to that supplier through a email on his registered email ID. He will send a registered email on his registered email ID. On the common portal also, he will send an intimation that yes, this is the case, your GSTR1 amount is more than your GSTR3B amount. Now, in that intimation, what all things he will be mentioning? It will be, department will mention. First is difference between GSTR1 and GSTR3B will be highlighted, that yes, there is a difference between GSTR1 and GSTR3B. Second is, he will be asked, the supplier will be asked to pay the differential tax liability between 1 and 3B. So he would be told that yes, this much is the amount of the difference between your GSTR1 and GSTR3B tax liability. Then he will direct that supplier to pay that differential tax liability along with interest. Since he has not paid it in the first instance, he will be directed to pay that amount along with interest. Then the direction to explain that, or if he feels that yes, this difference is justified, it is because of some reasonable cause, then he needs to explain the reason for difference in tax liability in GSTR1 and GSTR3B. So on the common portal itself, he can give a reply that yes, this is the reason why this difference is arising. This needs to be done. Now this action needs to be taken within a period of 7 days. This is what is mentioned in the intimation. Now, the supplier, now what is required? What action is required on part of the supplier? He has to do either of the two things, and that too within 7 days period. So what is important is this 7 days period. Okay. So within this 7 days period, the supplier has to pay the differential tax liability, which the department is saying that yes, this is the difference between GSTR1 and GSTR3B, and you need to pay this amount. So if he pays that amount fully or partially, along with interest, or he gives a reasonable or satisfactory reply that yes, why this difference is existing, why there is a difference in the tax liability as per GSTR1 and GSTR3B. So he furnishes a reply incorporating reasons in respect of unpaid part of the differential tax liability. This is what is expected from the supplier. Either of the two things. Either he pays that amount or he gives a satisfactory reply that why this difference is there. This has to be done within 7 days period. And it's important that till the time he does not furnish that reply or he does not pay that differential liability, his GSTR1 and IFF will be blocked. So he will not be able to furnish his GSTR1 till the time he does not give a satisfactory reply for this particular difference, or he does not deposit the differential amount. Either of the two corrective actions, if he has not taken, his GSTR1 or IFF facility will be, for the subsequent tax period, will be blocked. So he will not be able to upload his invoices for the subsequent period till the time he does not take any of the two actions. Now, so suppose he does not take this corrective action. If he satisfactorily replies, or if he replies but his explanation is not found acceptable by the proper officer. So in case his reply is satisfactory, then it's fine, or he has deposited the amount, then also it's fine. But in case neither of these two cases are there, that means either he has not deposited the amount, or neither he has deposited nor he has provided satisfactory reply. That means his reply is not acceptable to the proper officer. Proper officer feels that yes, this is not a genuine reason, this is not a reasonable cause, that there is a difference between your two liabilities, or he has not given any explanation at all. He has not explained or given any reply within 7 days period. Then in that case, that amount which is there with the amount difference in the tax liability will be recovered or will be recoverable from the person under section 79. Okay, so that is the serious repercussion which the supplier has to face. So there should not be any difference between GSTR 1 and GSTR 3B of the tax liability or the output tax payable of the GSTR 1 and GSTR 3B for a particular supplier. Otherwise, either he has to give an explanation for that why this difference is arising, or that explanation should be acceptable to the proper officer also, or he has to deposit the difference in the two amounts along with the interest amount. Now, application for refund by unregistered persons. Now, this is also an important functionality under refunds which has been activated. So there could be a case where a contract for supply of construction service has been entered into between a builder and an unregistered buyer. The buyers of the residential units or commercial units, whatever is there, but a builder is there and he has entered into a contract for supply of the construction services. When will we call these services to be construction services? When the builder has taken some amount of payment before completion of the property, before completion of the unit. Some payment has been received from the recipient to the builder, by the recipient to the builder, some amount has been given. So if the builder has entered into such a contract of providing construction services, construction of flats, buildings, etc. to the unregistered buyer, and buyer has paid his consideration. Now it could be full consideration, it could be part consideration also, along with applicable GST. He has paid the consideration because it's a construction service, GST is applicable on it. So buyer would also have paid the GST on that particular service. And subsequently what happens is that the contract gets cancelled. Either the builder does not complete the building, or there could be some other reasons because of which the buyer feels that he does not want to continue with the contract and he wants the contract to be terminated. So the contract gets terminated or cancelled subsequently. So builder has provided these services partly or fully. Unregistered buyer has paid the consideration either fully or partly, plus he has paid the tax. And this person has afterwards, the builder or buyer, either of them, cancels the contract. So contract is cancelled subsequently. And the most important point here is that the builder refunds the amount received from the recipient or buyer, but he does not refunds the tax amount. Why? Because one way to refund the tax amount is the builder issues a credit note to the buyer. But credit note, you know that it can be issued up to 30th November of the next financial year. And suppose that time period has also lapsed, the contract get cancelled after that, because you know that these construction contracts, they're very long-term contracts. They go to 5 to 10 years, and that particular construction service, the payment, everything suppose was received in first year, second year, first 2-3 years, and the contract got cancelled subsequently. So that period of issuance of credit note has also lapsed. Now the builder cannot issue the credit note. Now, when builder does not issue credit note, or when builder cannot issue credit note, so builder will not get the refund of will not get the adjustment of the tax amount. So what he will do, he will refund only the consideration or the value of supply to the unregistered person. He will not refund the tax amount to the unregistered person. Because he cannot issue credit note, he cannot issue credit note under GST law. He can issue a commercial credit note to the unregistered buyer, but credit note under GST law cannot be issued, and because of which the tax amount cannot be adjusted. So that is why he has not refunded the tax amount to the buyer, because he says, I am paying it from my own pocket, so why should I give it to you as a refund? or why should I refund this particular amount to the buyer? So that amount he will not refund. A similar case can be in case of the long-term insurance policies. Insurance policies are for a long tenure, and the buyer has paid, the insured person, policyholder has paid the insurance premium along with applicable GST to the insurance company. Subsequently, this contract got cancelled. Now, again, the same thing happened. Insurance company refunds only the proportionate amount of the consideration and net of GST. GST amount it does not pay because, again, the same reason is there, that the period for issuance of credit note is expired. Now, a doubt might have arisen in your mind that what if this period has not expired? We are still within the period of issuance of the credit note. There could be a case where the contract got cancelled very early and the builder or the insurance company can issue the credit note, and it can set off the GST amount also. So there could be a case of in that where the credit note can be issued. If that is the case, then this whole situation of refund will not arise, because buyer will get his GST amount also, he will get his consideration, he will get his GST amount, everything is set off. So the transaction is fully adjusted. He does not need any refund, because refund will be required only in case when the buyer knows that he has received only the consideration and his tax amount which he has paid on the value which pertaining to which services were not received by him. So he has to get a refund for that. He has to move to refund route only when the time period for credit note has lapsed. So if this condition is there, then only the refund provision will invoke, or then only the refund will be required at all. Otherwise, this credit note, with the issuance of the credit note, the buyer will be getting the GST amount also. So there will be no requirement of credit at all in case the credit note period is still there. But in case the credit note period has lapsed, and this is the situation, then what will happen? Earlier, there was no provision or no functionality for refund in such cases, because the person is unregistered. So how can he claim refund from the GST portal? So for that purpose, a new functionality has been activated now. And that particular person the unregistered person has to take a temporary registration. A new functionality has been activated with refund for unregistered taxpayer. There it has to apply for refund, and refund has to be applied only in the form GST RFD 01 only. So there is no separate form for this particular purpose. The common form which is there for all for applying for refund, GST RFD 01, that is applicable for this unregistered person also. Only he has to take a temporary registration, and some documents he has to, some documents he has to give along with the refund claim. Now, what documentary evidence he has to provide? First, we'll see the certificate which is provided by the supplier. Now, see what documentary evidence the supplier has to give, because we already said that the supplier should not have issued a credit note. Then only this refund provision will apply. So that is what is given in the second point, that he has not adjusted the tax amount involved in these invoices against his tax liability by issuing a credit note. So credit note should not have been issued. First condition. Now this is a certificate which is provided by the supplier. Supplier has to certify that this is the case where credit note has not been issued. He has paid invoice on the amount for which refund has been claimed. He has not claimed the refund on his own. So these three conditions has to be certified by the supplier. These three things have to be certified by the supplier, that he has paid the tax, he has not claimed refund of that particular tax on the amount which is being claimed as refund by the recipient, and he has not issued any credit note. Because had he issued the credit note, then this amount would have been adjusted. The GST amount also would have been adjusted. So this certification is required from the supplier. Important thing is that CA certificate is not required even if the amount is greater than rupees 2 lakhs. So this is a special relaxation here, that this CA certification, cost accountant and chartered accountant certificate, is not required even if the amount of refund involved here is more than rupees 2 lakhs. Now, apart from this, the documentary evidence which is required here is, so let's see, it's statement containing details of invoices, copy of such invoices. So there will be a statement which will contain the details, whatever invoices are there. Then the copy of all those invoices, which will have the amount, which will have the rate which is applied, GST rate which has been applied. So all the details will be there in the statement as well as in those invoices. Then proof of making payment to the supplier or the builder, insurance company. We should have some proof also that yes, we actually paid that amount to the builder. Copy of the contract entered into with the insurance company or builder, and the letter of cancellation of contract. So all these things are, you can easily see that whatever documents are required, they actually justify that yes, the contract has actually been cancelled and this refund is reasonably due to the unregistered buyer. Details of the payment received from the supplier against cancellation, because this is the amount corresponding to which the tax paid has to be claimed as the refund amount. So this is the refund amount. Now, before that, Chirag has asked a query that if credit period is not expired, then insurance company will issue credit note and reduce its GST. But since buyer is unregistered, how will he get the GST amount paid? No, but buyer is unregistered. That does not make any difference. Na? He will issue a credit note. The insurance company will issue a credit note. Insurance company has will get the adjustment of the ITC, will get adjustment of the output tax which is paid by the insurance company or the builder. Correspondingly, what insurance company or builder will do is the amount. Suppose, let's take an example. Suppose the amount which has been cancelled, after cancellation, the insurance company gives 1,000 rupees to the unregistered buyer, and on that 18 rupees tax was payable. So the company returned 1,000 rupees, and 18 rupees it will not return because the credit note period has lapsed. This was the case which we are discussing. But suppose credit note can be issued and a credit note has been issued. Then when the credit note will be issued, the company will issue a credit note for rupees 1,000 and it will show a tax of 18 rupees on the credit note. So it's GST liability, that the GST liability of the builder or insurance company will reduce by 18 rupees and it will get a set off of 18 rupees paid to the department. What the builder or insurance company will do, it will refund the entire amount, 1,000 plus 18 rupees to the recipient, to the buyer. Because that means buyer will get the entire amount. He is not registered, but he is not bothered about GST returns and GST department. He has nothing to do with the GST department. He has given you the amount. He has paid you 1,000 rupees also, 18 rupees also. Now, when you are returning the amount, you are returning only 1,000 rupees. That is why he got concerned with that 18 rupees, that what needs to be done with those 18 rupees. I have to claim on my own because credit note period had lapsed. But in case the credit note period has not lapsed, then the builder or the insurance company can itself take care of it. What they can do is they can issue a credit note, they can return the entire amount, 1,000 plus 18 rupees, to the recipient, to the buyer, and this way buyer will get the entire amount. GST liability of the builder or insurance company will also reduce by 18 rupees. So this will be a complete set of transaction, and no other action is required on part of any of the parties. So with this, we'll take a 5 minutes break and So welcome back, students. Now we'll start from where we had left earlier. But before that, I will take that query which a student had raised, that in case the renting of residential dwelling is to a registered person, then we have a reverse charge entry for this particular purpose, that any renting of residential dwelling to a registered person, the tax on the same will be payable by the registered person, or under reverse charge mechanism, the recipient will pay the tax. Now, if you see the entry here it is not actually talking about, just a minute. The reverse charge entry does not talk about the use. That what is the use of the particular residential dwelling. It only talks about the recipient to which this residential dwelling is being rented. Is it a registered person or an unregistered person? So if it is a registered person and the residential dwelling is for commercial purpose, then also it will be reverse charge provisions will apply. And if it is for residential purposes, then also the reverse charge provisions will apply. So because, however, in case of the registered person, when the property is being rented to a proprietor for use in his own capacity, in his own account, and as his own residence, in this particular case, since the service itself is exempt, here the reverse charge provisions will not apply. Because when something is exempt, then the payment of tax under reverse charge will not arise. This question of paying the tax under reverse charge mechanism by the recipient, this will not arise because the service itself is exempt. If you are paying a renting of residential dwelling service to a registered person, but this registered person is a sole proprietor who is taking this property or this residential dwelling on rent for his own purpose, for his own consumption, not as a sole proprietor, not in on behalf of the sole proprietorship firm, then this is exempt. Now, when the service is exempt, then reverse charge provisions definitely will not apply. Otherwise, the reverse charge entry says that the renting of residential dwelling for use to a registered person. So whether for use as residence or for commercial purpose, this will attract reverse charge mechanism. Now, the catch here is that when this exemption entry was modified few months back, so simultaneously this reverse charge entry has come. Last year in July 2022, these two entries were there amended. The first entry for the exemption was modified, and this reverse charge entry has been newly inserted at the same time, that the renting of residential dwelling to a registered person will be charged or taxable under reverse charge. So before that, the renting of residential dwelling for commercial use, that was not exempt, that was taxable, but still it was not liable to tax under reverse charge mechanism. That means the recipient was not liable to pay tax. Now, in this case, after this new entry in reverse charge notification, now the renting of residential dwelling for commercial use, even if it is since it is being rented to a registered person, so even if it is for a commercial use which was not earlier attracting a reverse charge liability, because of this entry, now any residential dwelling which is rented to a registered person for commercial use, for residential use, it will attract a reverse charge liability. Only thing is, if it is exempt under law, then reverse charge liability will not be there. So hope it makes the adjustment and amendment clear to you. Now let's move to the next amendment which we were discussing. This 89.2 also, I hope, was clear to everyone. Now next amendment. So it is a clarification regarding section 75 subsection 2. Section 75 has various provisions regarding demand and recovery. Section 73 has the demand and recovery provisions pertaining in a case where there is no fraud, willful misstatement or misrepresentation. Then section 74 has the demand and recovery provisions in case of fraud, fraud and misconduct, misstatement is there. Then section 74 is applicable. Section 75 has the general provisions regarding these two sections. So one of the provisions of section 75 subsection 2 provides that in case an appellate authority or an appellate tribunal or a court concludes that a particular show cause notice is not sustainable by under the charges of fraud, willful misstatement, etc. Because so this show cause notice is not sustainable because the charges of fraud, misstatement have not been established, and section 74 charges cannot be established. So we cannot say that it is maintainable under section 74. Then this particular court or appellate authority or tribunal can direct a proper officer to redetermine the amount of tax, deeming this show cause notice which was earlier issued to be issued under section 73, because only thing which was not maintainable or only thing which could not be proved was the charges of fraud, that this had been done willfully or intentionally, this fraud was done, or this misstatement or this wrongful act was done intentionally. This could not be proved. So because of that, it does not mean that this particular demand will be dropped forever. That particular show cause notice is maintainable, or that will be deemed that it has been issued under section 73, and this court or this tribunal or adjudicating authority, appellate authority, will ask the proper officer to redetermine the amount of tax which is to be paid as per section 73. So PO has to, or the proper officer has to deem that the show cause notice has been issued under section 73 subsection 1. This is what section 75 subsection 2 says. Now this is a provision of which is there in law at present. There were some doubts regarding its application, and those doubts have been clarified by a notification. Now, what are those clarifications? First is that the time period up to which this determination can be done. So this order for a redetermination of the amount can be passed from 2 years from the date of communication of said direction. So this redetermination of the tax, proper officer can redetermine the tax up to 2 years from the date from which this direction has been communicated to him, that yes, he has to redetermine the tax. Second thing was that how this tax has to be determined under section 73. That now when we can determine when this show cause notice under section 73 is maintainable, because earlier it was under section 74. Now the proper officer has to deem that it was issued under section 73. So there are certain conditions which should be satisfied, which are, first of all, original show cause notice which was issued, which we are talking about here, that it was not maintainable under section 74, but that should have been issued within the stipulated time under section 73. So section 73 provides that a show cause notice under section 73 should have been issued within 2 years and 9 months from the due date of furnishing annual return of the respective financial year, or from the date of the erroneous refund, whichever is the case is there with you. So if the show cause notice has been issued within that particular time, then only this show cause notice is maintainable under section 73, because for section 74 we have a larger limitation period. So there is always a possibility that the show cause notice originally could have been issued after 2 years 9 months. So in that case, it will not be maintainable under section 73. The entire proceedings will be dropped in that case, because the limitation period under section 73 will be hit in that case. So if that original show cause notice was issued on or before 2 years and 9 months time period, then it is maintainable, and the proper officer can now determine the tax liability as per section 73. But if it is issued after that period, because as I already told you, 74 has a larger limitation period, so in that case the entire proceedings will be dropped and the limitation period will be attracted. Now the second is now there is a clarification regarding section 74. Section 74 provides that if the government dues means any interest, the interest penalty or any other amount payable as a result of demand under the GST law. So if any government dues under this act, under the GST law against any person, have been reduced because of any appeal, because of any revision or any other proceedings. This is what I am telling you, what section 84 says. Then I will tell you what clarification has actually clarified. So if it is as a result of this appeal, revision or other proceedings, the amount of government dues has reduced, then there is a liability under this, there is a provision under this GST law that it has to be intimated the intimation has to be given by the commissioner. There's a liability on the commissioner. There is a duty of the commissioner is to intimate this reduction in the government dues to such person, and intimation to be given by the commissioner to such person to the appropriate authority with whom the recovery proceedings are pending. Now, what does other proceedings include? So there was a question which arose that whether the insolvency and bankruptcy code proceedings, whatever proceedings are being conducted under insolvency and bankruptcy code, whether they will also be included in this other proceedings. The word other proceedings, whether it includes the proceedings under, because appeals and revisions, we know what it means. The word itself is very explanatory in nature, that yes, appeal under GST law or under revision proceedings under GST law. But when we talk about other proceedings, does it include insolvency and bankruptcy code proceedings? So yes, it includes the proceedings under insolvency and bankruptcy code. For example, under insolvency and bankruptcy code, the NCLT serves as an adjudicating authority for insolvency proceedings which are initiated on application from any stakeholders of the firm, creditors, debtors, employees, etc., and passes a resolution. So as proceedings are conducted under IBC, they also adjudicate the government dues pending under CGST Act or under any other existing laws. So they are also included under other proceedings. So proceedings under insolvency and bankruptcy code will be included in the other proceedings, word which is mentioned in section 84. Now there is amendment in the appeals and revisions provisions. To the extent this form for filing appeal to a appellate authority. When we are filing an appeal against the order or decision of the adjudicating authority to an appellate authority, then there could be two cases. First is aggrieved person, that means the taxpayer has filed the appeal, and the department can also file the appeal. So appeal can be two-way, it can be either by the department or by the aggrieved person. The amendment why it was required is that we know that the order against which the appeal has to be filed, the order of the adjudicating authority which is being appealed against, it has to be made available to the appellate tribunal. So earlier this process was done manually. A certified copy, a self-certified copy of the proceedings was this order or decision was submitted to the appellate tribunal, and thereafter the proceedings used to start. Now, over a period of time, since it is in GST, everything is based online and everything is available on the common portal. So decision or order is also available to the appellate tribunal on the common portal. And this specific requirement of the appellant submitting this self-certified copy to the appellate tribunal can be dispensed with, because it is no more required. It always used to be available with the appellate tribunal automatically on its own on the common portal. So the online itself, the copy used to be available, and there was no requirement to submit it offline or in manual mode. The self-certified copy submission was not required. So this, when the law was drafted, the manual procedure was being prescribed. Now, since the copy is available online, so accordingly this procedure has also been revised, or it also has been updated. Now, let us see, first of all, have an idea that what this appeal in both the cases, how it is filed. When we file an appeal against the order of the adjudicating, against the order of the, just a minute. Adjudicating authority to the appellate authority. So the order can be appealed against by the taxpayer, or by the department. So if it's appeal is filed by a taxpayer to appellate tribunal, then the provisions are section 1071 read with rule 108. And in case it's a departmental appeal, then rule 109 is attracted. Form for filing the appeal is form GST APL 01, and in case of the departmental appeal, GST APL 03 is to be filed. So this is the overall structure, which is still the same. What has actually amended here is, when appeal to appellate authority is filed by an aggrieved person, in that case, I told you that the order, it is possible that order is already available on the portal and we do not have to manually upload the order. So this is the leftmost portion. That means the portion till here is what has actually changed. This was already there. This was already there. Okay. Now what was already there? First of all, we'll see that, and then now what is position now? Where the decision and order is not uploaded on the portal, which is the situation which was earlier there also. Then appellant had to submit a self-certified copy within 7 days for filing appeal in GST APL 01. Now, when the person used to file the manual copy, he used to upload the manual copy, then he used to get a provisional acknowledgement. And so when he used to file the appeal, then he used to get the, after filing GST APL 01, he used to get a provisional acknowledgement. But after filing this certified copy of the order, he used to get a final acknowledgement. So final acknowledgement was issued only after issuing this self-certified copy. When he used to file the appeal in the form, then a provisional acknowledgement was given. But if within 7 days of filing this application in GST APL 1, he files the self-certified copy of the order, or he uploads the self-certified copy of the order, then in that case, what is the date of filing the appeal? The date of filing of appeal will be date of issue of provisional acknowledgement. So he got the provisional acknowledgement on the very date when he filed this form APL 01. After that, within 7 days, he filed the self-certified copy. So we will assume that he had filed the appeal on the date when this form APL 01 was filed or provisional acknowledgement was given to him. If the self-certified copy is not submitted within 7 days, then the date of filing the appeal will be date of submission of this copy. So copy must have been submitted after 7 days. Then whatever is the actual date of submission of this certified copy of the order or decision of the lower authority, that will be considered as the date of filing the appeal. This is all a procedural aspect of the filing appeal to the appellate tribunal, actually. Appellate authority. Now, the situation which has changed now. Now, this is all which was happening earlier also, that when decision or order is not uploaded on the portal. So this can happen now also. But now generally what happens is the decision or order is normally simultaneously uploaded on the common portal. So as soon as the order is passed, it is generally by default it is made available to the appellate authority on the portal itself. And so by mistake I might have called appellate authority as appellate tribunal. So please please consider that adjudicating authority order has to be appealed to appellate authority, and this is what we are considering here. So where the decision or order is uploaded on the portal, then the provisional acknowledgement will be automatically issued to the appellant, and he need not upload the copy of the order. This is already uploaded on the portal. Final acknowledgement will be issued to him. He submits the application in APL 01. He gets a provisional acknowledgement. Within 2-3 days, the order gets uploaded on the portal. He gets a final acknowledgement, and the date of the provisional acknowledgement itself is the date of filing the appeal. So he need not file this self-certified copy. This has actually been dispensed with. Without doing this, automatically he is getting the final acknowledgement when this order is uploaded on the portal. And the date of filing the provisional acknowledgement is the date of filing the appeal. So in this case, this default is not going to happen because the portal itself is uploading the order, and that too within the stipulated period of time. So it is automatically getting uploaded. There is no requirement of submitting the self-certified copy by the appellant on the portal. Same is the case with the department. In case of filing appeal by the department, then also there was a requirement on the department to upload the decision or order on the portal. So if it is not uploaded on the portal, then same procedure will be followed, that he has to submit the self-certified copy also within 7 days. And if he doesn't submit it within 7 days, then the date of filing of appeal will be date of submission of this self-certified copy. But in case the self-certified copy is uploaded on the portal automatically, then the person, that the appellant, need not upload the self-certified copy manually, and therefore the date of filing appeal will be date of issue of the provisional acknowledgement itself, because final acknowledgement also he'll get within 2-3 days, and therefore there will be no default in this case, because only in case of default the date of filing of appeal postpones to the date of submission of the certified copy. Since there is no submission of certified copy in this case, so the date of filing of appeal will always be the date of issue of provisional acknowledgement. So with this, we come to an end of all the statutory update provisions. And Prasad has asked me that when we are re-availing the credit under Rule 37A, so can we re-avail the credit of interest also? So Prasad, as far as it appears to me, you can re-avail the credit which you have reversed as per the provisions of Rule 37A. Now, all the statutory updates have been covered. Now we would be covering quickly the question paper, what is the question paper comprises of, and then we'll cover the applicability and other similar aspects. First is the question paper of indirect tax laws has two parts, Division A and Division B. Division A has the case scenario and independent MCQs. These MCQs has a weightage of 30 marks and descriptive questions has a weightage of 70 marks. In case scenarios, we have only GST based case scenarios. 2 case scenarios will be asked, and these case scenarios will be based on the GST law. Then for 5 marks, customs MCQs will be asked, and they will all be the independent MCQs. So for GST, both independent as well as case scenario based MCQs will be there, but in customs only independent MCQs will be there. And case scenario based MCQs will be only 2 markers, and they will be application and analysis based questions. Descriptive questions carry 70 marks weightage. Question 1 out of which is the compulsory question, which carries 14 marks, and it is based on GST only. It is not based on customs. So first compulsory question in descriptive portion is of GST, and thereafter we have 5 more questions in which then 5 out of 5 questions, 4 have to be attempted, and GST portion in each of the questions is of 9 marks and customs portion is of 5 marks. So all the questions in the GST question paper in descriptive portion carry 14 marks. First question is a compulsory question which has only GST portion, and it is a one big comprehensive question based on the testing of evaluation and synthesis skill of the students. The rest of the questions are a mix of application and analysis and comprehension and knowledge skills, and each of the question here will be of 14 marks. So all 6 questions are of 14 marks. The optional questions have a breakup of 9 marks for GST and 5 marks for customs. Now what is important here is that the applicable position of law on the basis of which you have to answer the questions for November 2023 examination. So all questions in November 2023 examination have to be answered on the basis of position of law. If we say GST law, it should be as amended by Finance Act 2022, including significant notifications and circulars which have become effective till 30th April 2023. So the cutoff date for this November 2023 examination is 30th April 2023. You have to remember it very religiously, because any amendment which has taken place after 30th April 2023 is not relevant for your examination. Like I discussed with you, the amendment in section 12(8) of the IGST Act, which is not relevant for November 23 examination students, but it is relevant for May 24. So May 24 students can refer it from their study material. But as far as the applicability is concerned, the question should be based on the position of law which is existing as on 30th April 2023. So suppose there is a change in position of law before 30th April. For instance, there was some rate of TDS or some other rate could be there, which is one rate is there in January, applicable in January, then same thing is changed in February, and a new rate is applicable on 30th April. So what is the position of law on the basis of which the question asked in the examination has to be answered? We have to answer our question on the basis of 30th April 2023. It is given as an instruction on the top of the question paper also that all the questions have to be answered based on the position of law as on 30th April 2023. So if changes have taken place before that in prior to 3 months and different position of law have existed at different point of time, then we do not have to get confused. We have to write our question as per the position of law which is existing on 30th April. So you do not have to remember the interim changes which are there in the law on various points of time. You have to remember what is applicable as on 30th April 2023. If question comes, then you have to answer it as per this position, and you have to mention it if you feel that question is pertaining to a different period where the position of law was different. Maybe you are aware of that, though we do not expect you to be aware of that also. What we expect is you should know the position as on 30th April. So whatever has been asked, you have to answer it as per 30th April only. But then also if you feel that some other position of law was applicable as per the period asked in the question, then also you can write a note in the answer that yes, we are answering our question on this position, and this is what is applicable for our examination, because this is an instruction for in your question paper also. So the question paper specifically asks you to answer on the basis of this position, then you do not have to deviate from that, and don't try to remember all the provisions or all the changes. So before what the provision which was before the change, then after the change, what are the provisions? Don't try to remember each and everything. Only the applicable position of law is what expected from you. In customs also, the position of law as amended by Finance Act 2022 and notifications and circulars issued till 30th April 2023 are expected. In this regard, you should know that foreign trade policy has been revised in the month of by the end of March. So we have given the revised foreign trade policy on our website, and all the students are requested to refer to the revised foreign trade policy only, foreign trade policy 2023. It has been summarized and hosted on the website under statutory update for November 2023. So you all are requested to refer to that particular foreign trade policy provisions. Let's some queries there. Chirag, the question which you are mentioning, I will look into that question, and if you have any specific query, you can post it at idt-final@icai.in also. I will give you the email ID at the end of the session. Any of you have query in any of the publications or any of the provisions, you can post it to us through BOS app also, as well as at idt-final@icai.in, because there you can ask your specific queries which you have. Then applicable BOS publications. Now BOS publications which are applicable for your examination are study material. It's important to note that study material you have to refer October 2021 edition of the study material plus supplementary study paper 2023. And along with that, statutory update for November 2023. GST portion of the statutory update we have just completed. Apart from that, we have few amendments in customs, as well as the foreign trade policy. Again, I would repeat that new foreign trade policy has come into existence, and you have to cover the new foreign trade policy. So coverage of foreign trade policy in descriptive and MCQ questions is not fixed. Chirag has asked that what is the bifurcation of the foreign trade policy in descriptive and MCQ portion. There is no fixed bifurcation that 2 marks MCQs will come, 3 marks descriptive, or vice versa. No such bifurcation is fixed. It can be asked either completely in descriptive also, or completely in MCQ also, or a mix of two can also be there. Only thing is you need to refer to the new policy for answering the questions. Then the MCQ and case scenario booklet. So that has also been, the MCQs have been updated for November 2023 examination, as well as some case scenarios have also been updated, and they have been hosted on the website. You can refer the same because they have been updated with the position of law which is applicable for your examination. And next is the revision test paper. Now, revision test paper has all the updated questions. Revision test paper for November 2023 examination have been hosted. You can refer them. Mock test papers are being hosted. One set of mock test papers have been hosted, and another set will be hosted, I think, in October 1st week. They will start from October 1st week. So mock test papers, try to attempt these mock test papers in exam-like conditions because they will help you in assessing your preparation for the examination. So once you are thorough with all the concepts of the study material, all the test your knowledge questions, then all the concepts which are given in your supplementary statutory update, you have completed everything. Then go through the MCQ and case scenario booklet because case scenarios are generally integrated, has an integration of 2-3 provisions. So you should go through them and then you should try to solve those questions on your own. Don't try to see the answers, solve these questions on your own. Then see where the difference is there. So wherever you find that there is a gap in your answer and the answer given in the book, try to find out the reason for the same because there could be a case that you are not very thorough with that particular provision. You are lacking in practice with that particular provision. So what the ideal way is that you should solve the question on your own and then you should check the answer. Then we have the revision test paper and mock test paper. There the questions are all updated questions are given to you in the form of MCQs as well as the descriptive questions, both in revision test papers as well as the mock test papers. So try attempting them. Revision test papers, after completing the entire syllabus, first attempt the revision test paper questions, and then under exam-like conditions, you should go for the mock test papers. Now, question may arise where to get these publications from. So these publications are available on BOS Knowledge Portal as well as BOS mobile app. You can download the mobile app also. You will get all the notifications of the latest updates and all the latest publications in your mobile app. You will get all the live coaching classes. The facility of live coaching classes is available on the app. Then you can post your query also. Subject related queries you can post on BOS mobile through mobile app. There is an option in BOS mobile app of ask your query. So you can download the mobile app and then you will be able to ask all your queries also through that portal. That I will link I will give at the end of the session. Then we have the section wise and skill wise weightages. Now section and skill wise weightages you must be knowing that each section of your study material or your syllabus has been divided into various sections and there is a specific weightage which that section carries. So some sections are more important, they have a higher weightage, and while preparing for the examination, we all should be aware of that so that we should give more emphasis on that particular section. We never suggest the selective study because whatever is relevant for the examination, you have to study that. But you can put more emphasis, the practice of questions, the kind of questions which we are practicing, then the conceptual understanding. So we can give more time to that particular section, we can give more emphasis to that particular section. That is why the section-wise weightage is important. Skill-wise weightage is that what type of skills will be tested from that particular section or that particular part. In indirect tax laws paper, there are two parts, GST and customs law. So weightage of each of these two parts, what type of skills will be tested? What is the weightage of comprehension and knowledge skill, then application and analysis, and then evaluation and synthesis skill. So one important fact here is that in case of the customs law, you will be tested only on the comprehension and knowledge skill and this application and analysis skills. There will be no question based on evaluation and synthesis skill, which is a higher order thinking skill. It will not be tested. Customs portion will not be tested for that skill. So no question will be based on evaluation and synthesis in the customs part. But in GST, one full-fledged question of 14 marks, the first question, that is a compulsory question, that is based on evaluation and synthesis skill. And that is asked under GST. So we'll go through the specific skill-wise weightage subsequently. First is the section-wise weightage. So we see the goods and services tax 75 marks. This is the weightage of part 1. Now this part has the maximum weightage is attributed to section 1. Section 1 has a weightage of 45 to 65%, and it covers all the substantive provisions of law, the legal provisions. That is the supply, then charge of GST, exemptions under GST, place of supply, time and value, input tax credit, and then computation of GST liability. So that evaluation and synthesis question, which is a comprehensive question, is primarily based on section 1 provisions. Then section 2 is the procedural part. That is procedures under GST law, registration, tax invoice. Then we have accounts and records, payment of tax, and returns, TDS, TCS provisions, refund provisions, job work, And apart from that, it has liability to pay in certain cases. So this is all what comprises of Section 2. Section 2 has second largest weightage, but still it is very low as compared to Section 1. So Section 1 is the most important section, which contains all the substantive provisions of law. Section 2 has a weightage of 10 to 30%. And then Section 3. Section 3 has a weightage of again 10 to 25%. Now this contains the four enforcement provisions: demand and recovery, offences and penalties, advance rulings, and appeals and revisions. These four topics are there in Section 3. They together carry a weightage of 10 to 25%. Last is the weightage of Section 4. It has a weightage of 5 to 10%. And the four topics which are covered here is introduction to GST in India, including constitutional aspects, administration of GST, assessment and audit, inspection, search, seizure and arrest, and other provisions. So this is all about GST law. GST law has four sections and weightage of each of these sections is given to you. Then customs portion. Customs and FTP, it together has a weightage of 25 marks. And again here Section 1 has the maximum weightage. It has a weightage of 40 to 65%. And the topics which are covered here is all the substantive provisions again. The levy and exemption of the customs duties, then types of custom duties, classification of imported and export goods, and valuation provisions. So this portion covers the 40 to 65% of the total paper of customs portion. Section 2 has the remaining important provisions. So we have three sections here. The second section is 20 to 45% weightage. It has a weightage of 20 to 45%. And the topics which it has is import and export procedures, then warehousing, drawback, refund, and the basic concepts of foreign trade policy. So basic concepts relating to export promotion schemes. Now all export promotion schemes of FTP are covered in this section. So you can have a weightage of these two sections, sections 2 and 3, to have a bifurcation of the foreign trade policy, because some part of foreign trade policy is covered in Section 2, which has a weightage of, which together has a weightage of 20 to 45%. Section 3 has a weightage of 10 to 20%. And in this, the introductory part of foreign trade policy is covered. If you see the introduction to FTP, legislation governing FTP, salient features of FTP, administration, then basic concepts relating to import-export. So all the basic provisions, introductory provisions are included in Section 3. It has a lesser weightage of 10 to 20%. Apart from that, this portion has a weightage of introduction to customs laws and the constitutional aspects of the customs. So this is what is covered in the Section 2, Part 2 customs and FTP as per the section-wise weightage is concerned. Now we come to the skill-wise weightage. I already told you that the evaluation and synthesis skill is not tested under the customs and FTP portion. So under Part 2 customs and FTP, we do not test evaluation and synthesis skill. It is only tested in the GST portion of the paper. Then we see comprehension knowledge has a lower weightage as compared to application and analysis. So in GST, the application analysis, and in customs, it is exactly the same. 45 to 75% is the application and analysis. And in GST, the comprehension and knowledge portion is comparatively lesser than the customs and FTP. Now the study guidelines for November 2023 examination, you know that study guidelines, they mention the topics which are excluded from the syllabus. So you do not have to prepare for those topics. I think if you are preparing for this November 23 examination, you must be aware of the topics which are excluded. We'll just go through them quickly. The rates of taxes for goods and services are not relevant. Then exemption for supply of goods. For services, it is within the syllabus, but the exemption for supply of goods is not in your syllabus. The RCM, reverse charge mechanism for goods, it is not in the syllabus. For services, it is there in the syllabus. You know, we discuss them time and again. It's there in the question also. So RCM in the RCM on goods, exemption from supply of goods, it is outside the purview of syllabus. Rates of taxes you do not need to remember. They will be provided in the question. Then in time and value, the Kerala flood cess value where Kerala flood cess is applicable, it is no more relevant. It's redundant now. Input tax credit, the real estate provisions have been excluded, and gold or bar provisions, they are not part of your syllabus. And transitional provisions under GST are not part of your syllabus. Under customs and FTP, the officers of customs, all these provisions, if you see, they are not there in the study material now. We have excluded them from the study material, and they are also excluded from your syllabus. Demand and recovery provisions, search, seizure and arrest, offences, penalties, confiscation and prosecution provisions, appeals provisions, settlement commission, advance ruling, other provisions, then demand and recovery, and this provision relating to coastal goods and vessels carrying coastal goods. All these provisions have been excluded. They are not part of your study material also. Only the warehousing provisions, which was earlier part of this list, has been included 2-3 attempts back in the reinstated in the syllabus. So it is there, a part of your syllabus, warehousing provisions. You should do that topic, and it's relevant for the examination. As regards the time management in the examination, now this is also very important, that on the day of examination, when you are appearing for your paper, then how can you manage the time in the examination? For that, I would say that first of all, make use of those 15 minutes reading time very judiciously, because you know that at that time you cannot attempt the paper, and it's a taxation paper, so it's generally very lengthy. So don't try to read each and every word. Have a glance at the paper. So have a glance at the paper and decide that, you know, that compulsory question is, you have to do it. Whatever is the question, you don't have a choice to leave that question. So apart from compulsory question, read all the, have a glance at all the other questions, and try to figure out that particular question which you have to leave in the choice, because that would be the question where you know least subparts. So if there is a question you feel that 2-3 subparts are not known to you, and there are other questions where almost every subpart you know, so you leave the question which you feel which is best known to you. So that question should be first question, best question should be your first question, and least known question should be the last question. So you have to decide the sequence. So decide the question, the best question should be your first question, which you will be attempting in the paper. As soon as you get the answer sheet, you have to attempt that question first. And where your lesser subparts, or you feel that this question is not I'm not very conversant with, that question you have to leave in the choice. Thereafter, you have to decide the sequence in which you will be attempting the paper, because first question should be absolutely the best question which you know, and try to attempt in the best possible manner. So as soon as you get the paper, you have done some kind of planning that yes, how you're going to do the paper. Have a estimated time also allocated for each of the questions based on their difficulty level, based on their length which they require. So now when you get the paper, start attempting the paper, and try to adhere to the allocated time for each of the questions. So if you feel that you are exceeding too much the time limit, then you can leave the question then and there and leave some space for that particular answer and move to the next question, and try to complete the entire paper, because you need to answer the questions based on the marks which they carry. You have to write in commensuration with the marks. So if a question is for 5 marks, then you have to write it accordingly. And if the same question is asked for 2 marks, then you have to write very less as compared to the question of 5 marks. You have to write in commensuration with the marks which a question carries. So this will save your time, and try to give justice, and try to do justice with each and every question equally, because you are going to get marks in each every question as per what you write. So if you attempt 3 questions in your best possible manner, and because of that you leave one question, or you're not able to attempt one question, then that is the cost which you're going to have, or you are going to bear of attempting those 3 questions in a fabulous manner, because having 6 average or 5 average answers will definitely fetch you more marks than 3 best answers. So attempt each and every question. Even if you don't know answer to any of the question, you are a final student, try to attempt it logically. Whatever you feel is could be the answer. You have read all the provisions, you have an idea how the law works, you have an idea of the basic provisions of law. So attempt each and every question, and then try to allocate some time for revision if possible. Then sometimes students ask what should be the sequence, whether first of all we should give time to MCQs, or we should do MCQs at the last. So there is no set criteria or set pattern for doing MCQs first or at the last. It depends on the convenience which you have. If you feel that you can save time in MCQs, you are good at attempting the MCQs, then you should do MCQs first. Try save time for descriptive questions, and then devote that time to descriptive questions. But if you feel that MCQs are tricky in your paper, you need to devote more time to them, then try to do descriptive first. try saving time on descriptive questions and then move to MCQ, so that you can do MCQs with cool mind, and then they will be you will be able to mark the correct answers. So don't give very lengthy answers, because if you are writing too much than the requirement of the question, that will not give you any extra marks for writing lengthy answers. So this is how you can manage your time in the examination. And with this, I think we have come to end of this session. We have already reached the time limit. And so we have got a fair idea that how we can, what all we need to prepare for the examination, the statutory updates which are there, and how we can manage time in the examination. So in case I told that where you can ask the queries, the ID where you can post your queries is idt-final@icai.in. This is the email ID. As well as if you have downloaded the BOS app, there is a section in BOS app of ask your query. You can post your queries in ask your query also. So these are the two forums where you can ask us the query which you have pertaining to this particular subject. And all the best for your examination. Thanks for the patient listening. Thank you so much.